All right, good afternoon. Welcome to Mr. Rice Trading Channel. Today, we're going to be defining what a pip is, defining the lot size. We'll be looking at different types of lot sizes. I'll be giving some recommendations on what lot sizes you should be using in your live or demo accounts. And then I'll also be showing you how to calculate your profits and your losses. So let's jump straight in. A pip is just a unit of measurement in the Forex market, right? If you were looking here, down at the bottom, let's say we got in on a buy because we would have expected the market to go up at 1.09500. And let's say the market went up to 1.09590 and we got out, right? We X'd out. We would have gained 90 pips, right? In order to calculate that, we would just subtract the larger number, 1.09590, minus the smaller number, 1.09500, right? Since both of these numbers have 1.09, we would just look at 590 minus 500, which would give us 90 pips. So that's how we would have calculated our pips gained. Now, if the opposite occurred, we would have lost pips, right? Let's say we would have gotten in at 1.09590 for a buy, expecting the market to go up. But let's say the market instead went against us, right? And it went down to 1.09500. And we decided, hey, you know what? We don't want to risk anymore. We want to get out, right? We would have lost pips. And the way that we calculate our pips lost is just to do the same thing, subtract. And you would subtract and you would have gotten that, you would have lost 90 pips. So that's our discussion on pips. Now, the lot size. You enter the lot size here at the top. This is where you enter the lot size. The lot size is just the trading volume you decide to trade with. It determines your risk. It also determines how much money you could potentially make and how much money you could potentially lose. So let's look at the different types of lots. The standard lot has 100,000 units, and the lot size would be 1.0, which means that you'd be making $10 per pip if your lot size was 1.0. Now, a mini lot, it has 10,000 units, and if your lot size was 0.1, that'd be $1 per pip. A micro lot has 1,000 units, and if your lot size was 0.01, that would be 10 cents per pip. And a nano lot has 100 units, and if your lot size was 0.001, that would be 1 cent per pip, right? So the most important boxes here, up here, are just going to be the actual lot size itself and the amount of money per pip. So now, lot sizes by account size, right? If you're working in a demo or a live account, this is where you want to be looking and listening, right? If your account size is between $50 and $2,000, we recommend a micro lot, which is 0.01 to 0.09. In other words, that's either, let's see, 10 cents per pip or 90 cents per pip, right? All the way up to 90 cents per pip. And obviously you can use the lot size in between if you want. It follows the same structure. If your account size is between 2,000 and 5,000, now you can come up to the mini lots, right? Mini lots are between 0.1 lot size and 0.9 lot size, which means that would be $1 per pip all the way up to $9 per pip. And then if your account size is between $5,000 and $10,000, or really just anything more than 5,000, then you can graduate up to the standard lot, right? You made it to the big leagues, right? 1.0 lot size means that that's $10 per pip. So you'll be making money very quickly. Or if you're irresponsible, you'll be losing money very quickly. If you go all the way up to the 2.5, right, that would be $25 per pip, right? And the lot sizes get larger. You can use a lot size of 5, 10, 20, right? But if you don't have enough money in your account, they won't allow you to get up to those crazy large lots. So that's why we're giving you this, so that you can use this as a good guide to guide your trading, right, for risk management. So now that we've discussed the definition of a pip and a lot size, and we've discussed the different types of lot sizes, as well as giving you some recommendations on which lot sizes you should be using based on your account size, we will now transition to calculating our profits and calculating losses, right? So in order to calculate your profits, you just need to take your pips gained on your trade and multiply it by the money per pip that corresponds to your lot size. So let's say we're looking at Euro USD, which is this chart here, Euro USD. And let's say we entered our trade, right? We hit buy at 1.11069 and we let the market run and we got out or exited our trade at 1.11169. We would have to calculate how many pips we gained. In order to do that, you just take the larger number or the exit and you subtract it by your entry. And you would find that we would have gained 100 pips. So now that we found the amount of pips gained, we multiply that times the money per pip that corresponds to our lot size. So if our lot size was 0.10, right, we go up to 0.10, that means that we'd be making $1 per pip, which is what I wrote here, $1 per pip. And so now we just multiply 100 times $1 and we would have gained $100 on that trade, right? So we would have gained 100 pips. And because we use a lot size of 0.10, which is $1 per pip, we would have gained $100. The same is true on the reverse. So in order to calculate your losses, you have to take your pips lost and multiply it by the money per pip that corresponds to your lot size. So if we entered a trade at 1.11069 for a buy, we expected it to go up, but the market instead went against us and went down, and we decided, hey, we got out here at 1.10969. We would have to subtract those two numbers, and we would find that we lost 100 pips. And we would take those 100 pips that we lost, multiply it times the lot size that we had in that trade, which was 0.10, right? And so 0.10, if you look here, it tells us 0.10 is $1 per pip. So that's what we have here, $1 per pip. And so 100 times $1 per pip, which would have led us to be here, $100 lost, right? So once again, in order to calculate your profits, you take the pips gain times the money per pip that corresponds to your lot size. In order to calculate your losses, you take your pips lost and multiply it times your money per pip that corresponds to your lot size. And so today we've discussed the definition of a pip, lot size. We've looked at the different types of lot sizes that are there. I've given you some recommendations on different lot sizes you may want to use to trade responsibly so that you don't blow your account. And then we've also taught you how to calculate your profits and losses. So if you have any questions about any aspect of this video, go ahead and comment. If you like this video, please like and subscribe. And please share with your friends, everyone who's trying to learn how to trade. Right, this is a great time to be trading. It's starting to become more and more popular, which is what inspired me to go ahead and start making these videos. So please continue to like, comment, subscribe. You all have a great day. More videos on the way. Thank you for joining Mr. Rice Trading Channel. Let's run up a tab. Let's get it. Let's get it.